Welcome to This Explainer. Today, we are completely demystifying the wild world of Canadian small business financing. We're cutting straight through the red tape, using official government guidelines and real private market insights to show you exactly how to get your business funded.
So let's just jump right into the big question that keeps literally every aspiring entrepreneur up at night. How do you actually fund your next big move? Look, whether you're eyeing a new commercial space, upgrading your tech stack, or buying a whole fleet of heavy trucks, capital is the absolute lifeblood of your expansion. But let's be honest, navigating government-backed loans and private lending, it's kind of a maze of strict rules, weird exemptions, and super specific asset classes. But don't worry, we've got a clear roadmap. We're going to cover funding your business streams, figure out who's actually eligible, look at what assets qualify, unpack those tricky loan limits, dive into the rules and rates, and finally, navigate the broader lending market. Let's get to it. All right, first up, funding those business dreams of yours. Straight from the source, the Canada Small Business Financing Act is designed specifically to, quote, increase the availability of financing to establish, expand, and modernize Canadian small businesses. Think of it as a crucial anchor. It shares the risk with banks so you can actually get the capital you need to launch a new venture or upgrade your current one. But, and this is a big but, to get this backing, you absolutely have to play by their rules. Which brings us right to our next point. Who is actually eligible for this stuff? Well, the rules have actually evolved quite a bit recently. The basics, you need to operate in Canada, have physical assets, and make under $10 million a year in gross revenue. But here's a really cool update. As of June 2021, not-for-profits, charities, and religious organizations operating a business are officially invited to the party too. Now, who's left out? Farmers, they have their own separate programs, and businesses that just buy real estate strictly to rent it out.
Now, if you're a serial entrepreneur running multiple businesses, pay close attention to this one. It's called the Independent Small Business Test, and passing it is absolutely vital to maximizing your funding. If the government sees you controlling multiple related businesses, your total loan limits get combined and severely capped. But if your businesses are separate legal entities, operating out of totally different premises, and neither gets more than 25% of its revenue from the other, boom, you're considered independent and your loan limits are safe.
Okay, so you're eligible. Great. Now, what assets actually qualify? What can you actually spend this money on? Turns out you can finance a massive array of business necessities. Buying a new brick-and-mortar storefront? Covered. Need to upgrade your delivery vans or buy custom software? Covered. And thanks to a major expansion in July 2022, you can now finance intangible assets. Think franchise fees and permits, plus everyday working capital. We're talking fresh inventory, payroll, and professional fees. It's a total game changer. But remember, the assets must be directly used for the operation of your business. The official guidelines give this really great example. Say a doctor buys a building just to lease the space out to physiotherapists. Well, that's ineligible because they're just acting as a commercial landlord. But if that exact same doctor buys a building to operate a nursing home, which qualifies as a small business, it becomes 100% eligible. It all comes down to how you use it. All right, let's start unpacking the actual loan limits. How much money are we really talking about here?
The absolute maximum total loan limit under the program is a cool $1 million per borrower. But hold on, you can't just grab $1 million and dump it all into payroll. You really have to pay attention to the strict subcaps tucked inside that big number.
I like to think of these limits kind of like a Russian nesting doll. You have this massive $1 million umbrella for real property, but step inside that, and you're capped at a maximum of $500,000 for equipment and leasehold improvements. Step inside that, and you only have $150,000 max for intangible assets and working capital. So you really have to strategize and navigate these partitions carefully. And, oh, don't forget the toll booth at the entrance. There's a mandatory 2% registration fee. The government charges this just to offset the program's costs. Now, you can roll this fee into your loan, but here's the catch. It eats directly into your maximum caps. So if you're already maxing out that $500,000 equipment budget, you're going to have to pay that 2% out of pocket or shrink your equipment purchase to make it all fit.
Okay, let's move on and look at the fine print, the rules, rates, and terms.
Notice the really stark contrast in timelines here. A term loan gives you up to 15 years to slowly pay off a fixed asset, like a warehouse or a fleet of trucks. But a line of credit, That is strictly capped at a 5-year max. Plus, it's restricted solely to floating interest rates. And you can only use it for your daily working capital. Completely different beasts.
Now, here is a fantastic safety net for all you eager entrepreneurs out there. It's basically a financial time machine called the 365-day rule. If you've been burning through your own savings to get your business off the ground, you can actually retroactively finance those expenses. As long as the commitments and expenditures were made within 365 days prior to your loan approval date, you are good to go.
So, what about the cost of borrowing? Well, the government sets strict maximums to protect you. A floating rate term loan cannot exceed the lender's prime rate plus 3%. A fixed rate term loan is capped at the single family residential mortgage rate plus 3%. And lines of credit? Capped at prime plus 5%. Now, lenders can totally offer you lower rates, but these ceilings ensure you won't get hit with exorbitant interest, even when factoring in the program's required 1.25% annual administration fee.
But the lenders need protection too. The program mandates they take a first ranking, valid, and enforceable security on the assets being financed. Buy a building, they take a first mortgage. Use the loan for working capital or software, the lender has to take a general security agreement on the other assets of your business. It's just their way of ensuring that, in a worst-case scenario, the capital is safe. Let's zoom out a bit now and talk about navigating the broader private lending market. Because, let's face it, sometimes government programs just don't fit the fast-paced, highly specific needs of certain industries. That's where private financing steps in. Private brokers cater to really niche markets that need unique structures. For example, looking at market data out of Oshawa, we see private lenders aggressively targeting heavy industries like trucking, forestry, and mining, as well as fast-moving sectors like e-commerce and licensed cannabis retail. When government red tape slows you down, private commercial brokers offer speed. They provide fast, flexible asset and revenue-based lines of credit, plus specialized equipment financing for things like those heavy trucks we mentioned. Some of these lenders even boast near 100% approval rates. Why? Because they specifically tailor their loans to unique, high-risk profiles that traditional, big-name banks simply won't touch. As the private lending materials point out, and this is so true, every single customer has a unique risk profile, a different credit score, and a different background. Ultimately, whether you tap into the rigorous, lower-cost government program or pivot to a fast-moving private broker, your specific operational needs and your credit history are going to dictate your best path forward. So, the capital to build, expand, or modernize your dream is out there waiting for you. Whether it's tucked inside a government safety net or a fast-moving private contract, you now know the caps, you know the rules, and you know the hidden limits. The only question left is, are you going to keep waiting for permission, or are you going to go out there and secure your funding today? Thanks for hanging out with me on this explainer. Keep learning and go build your empire.